Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live throughout the day from Philadelphia at Nasdaq and Villanova School of Business ETF Synapse, where we've been focusing on research and academia within the ETF space. Joining me for this segment, we have Gabor Gurbacs. He is the Director of Digital Asset Strategy over at VanEck, and I would imagine that you are in high demand anytime anyone hears digital assets. And you and I are about to sit on a panel together in just about a half hour, and your focus is going to be on what ETF is bringing to Bitcoin and the cryptocurrency world.
Yes, that's correct. So when we think about digital assets at VanEck, we think about integrating digital assets into the established capital markets. And one of the most established liquid and transparent vehicles are ETFs. So we're trying to find a way in which to use that vehicle to enable investors to benefit from it. So, what do ETFs bring to Bitcoin? One thing I look at is liquidity. So the liquidity that is brought through the authorized participant system and generally just the ETF ecosystem. I look at often price discovery. So ETFs are often priced based on established and regulated price series, like what we do at MVIS over in Frankfurt. And a few other things are, again, established capital market structure. I would say also compliance with global regulations. And today, millions of Americans already invest in Bitcoin. So we just want to provide a better and more secure way to enable Americans to own Bitcoin. And from our feedback we are getting, it's fairly clear to me that America wants a Bitcoin ETF.
Why has it been such a challenge to get an ETF with Bitcoin as the underlying?
I think it's because the market is fairly new, so the regulators are taking sort of like they want to walk before we run, and so we've been working for a while now on providing explanation from why our pricing methodology is appropriate, while there are already good enough custody solutions like Fidelity coming into the space and providing custody solutions is a big deal. And then from the investment side, and large endowments like Yale and sort of like other institutions are already in the space, and they have expressed a desire to invest in a way they are used to invest in equities and commodities and other.
There's a big desire for alternative investments out there right now, for sure. For 2019, in terms of your outlook, do you think that might be the year where we get an ETF?
Well, I hope so. I certainly don't know what the SEC have in mind, and we will know until latest by February 2019. But I'm positive. I actually think that digital assets have the potential in the next 2 decades to become a $10 trillion industry. And in order to get there, I mean, ETFs are at
$3.5 trillion. That's huge.
And yes, and when you think about it, gold has $7.4 trillion amounts outstanding, and digital assets disrupt some of the sort of like a store of value space, payments, and some of the applications sort of like open up the gates for 2.5 billion unbanked people. So I think the changes that we're going to see in the digital asset space is going to be very rapid. For ETFs to go from 0 to 3.5 trillion, it took about 20 years. I think for digital assets to get that 3 trillion level will take half of that, so 10 years. And in order to get to 10 trillion, I think it's going to take about 20 years, which sounds crazy at this point, probably. But I think once the technology environment is ripe for sort of creating this new financial system that I think is going to be radically different than from what we're used to.
It's global too, and in cases there are some developing markets that are already instituting a digital asset strategy and using cryptocurrency as a form of payment. It's almost like they're bypassing the traditional banking and currency system that we have now in place and using this already.
Yeah,
right? I mean, you see with our infrastructure now, you go to developing nations and their physical infrastructure is more advanced than ours. This could potentially happen with digital assets if we're not kept up with it.
Definitely. I mean, right now I would say the SEC and the CFTC are trying to do their best to evaluate
as
risk.
They should. They have investor interests at heart.
But we are falling behind. America's falling behind. Like Japan legalized Bitcoin. Bitcoin is legal tender in Japan, so you can pay with it. If a merchant has the ability to accept Bitcoin, they have to. So that's a very big step. And I think similar to what happened with emerging markets countries with the landline phone. So basically, there was no phone, and then they skipped the landline step and became
like
cell phone
5G
users.
leadership,
Yeah.
right?
Exactly.
So let me ask you this, and a lot of people that come on to discuss digital asset strategies on Trade Talks, I like to ask them, maybe it's not the capital markets that is the one to introduce this institutionally or mainstream. Maybe it has to come from the place of where a major retailer starts accepting it as payment, and you know, mainstream media and investors on Main Street can see that this is a viable form of currency. Maybe it doesn't come from the capital markets.
I mean, that's a good point, and my answer to that is there are already a number of merchants that accept Bitcoin and enable the usage of it. For instance, Square, right? They have their Cash App, and so you can use Bitcoin as a form of payment through that. So that system is getting integrated over time. And one way of thinking about Bitcoin and some of the digital assets is sort of like a payment instrument. But on the other side of the equation, Bitcoin is really a store of value instrument or digital gold. So people are looking to access it as in a buy and hold portfolio for the longer time versus in payments. So we are trying to sort of respond to that demand.
I think that'll help with long-termism too. If you have the ETF with the Bitcoin as the underlying, it'll help promote that long-termism, if you will.
Yeah, and just show that Bitcoin, what we believe that Bitcoin is compatible with US and global capital markets. There are some extra safety measures and some new research that needs to be done, but we think we have done that research, and we're sort of looking forward to get a positive response after so much work done. I mean, all of it is related to we want to keep innovation in the United States, and we also want to protect investors, and ETF helps doing just that.
All right. Well, thank you so much for joining me in Philadelphia, and thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter.